Hi, everyone. So, welcome to the stream today. Really excited for having you on this live mentorship series that we are going to be going through in the next few days or weeks towards the ICA July 2025 examination. We're going to be spending the time to go through the chief examiner's report and look at the various things that we need to look out for. But most importantly, we are going to be solving questions where I am going to be pointing out to you the various things that you need to understand when it comes to the questions. So we're going to be solving questions live, and then you're going to be guided on how to identify various principles, how to approach the questions, how to work with speed and accuracy, how to know the way you apply what you have studied in the book practically in a given question to put you in the position to go into the exam hall, write the exam with confidence, and pass the examination. So it promises to be a great session. I see some of you guys joining. You are welcome. Give us a thumbs up on the video when you join, and also remember to share the video. Let's reach as many students as possible during the course, during this program, so that together we can, help a lot of people. In today's session, I'm going to be largely focusing on financial reporting, corporate reporting, which is the accounting standards, and we're going to be taking a question and looking at how the various accounting standards can be applicable in a given question, and then look at the various things that we need to look out for when it comes to practically how we apply the various accounting standards that we study. I am also going to be taking questions, so if there are any questions you have for me, something you want me to share my thought on, please don't hesitate. Put it in the comment section or the chat. We are live on LinkedIn, we are live on Facebook, and also live on YouTube. So wherever you are, just leave me a comment in the chat. Whatever questions you have, I'll really be excited to answer your questions for you. Remember, we are in the 8th week for the discussion towards the July 2025 examination, week 8. That is where we are today, starting from this week. So technically, we have about 4 or 5 more weeks to go. In that regard, 5 more weeks to go for the July 2025 examination. Remember also that the registration is still ongoing for the examination. And as I say always, you want to make sure that you are only registering for the papers that you are setting off to go into the exam hall and pass. And that means that you need to know the structure of the syllabus. You need to have a deeper understanding of the application of the principles, which is what we are going to be getting ourselves into in this live mentorship series that we are going to be going through, and providing you with the necessary guidelines that you need so you can put yourself in the position to pass the examination. So registration is still ongoing. So if you are going to sit for the July 2025 examination, remember that you want to register and put yourself in the position. One of the things you must understand about registering for the exam also is that if you have a mind, or you want to sit for the exam, then you want to quickly lock yourself up as quickly as possible by registering for the exam. So when you register for the exam, subject to the fact that the date will not conflict with any work trip or assignments that you have to be out of town, then you lock yourself by registering for the exam. Now that you have registered for the exam, that is going to push you a little further to make sure you study, you go the extra mile. That means maybe sometimes you're going to sleep less hours, and then spend the rest of the time putting yourself in the position to study a lot. So waiting to rather register later, sometimes there is a little disadvantage to that. So lock yourself up as quickly as possible if really you want to sit for the exam, and register for the exam, right? That way, your mind is going to be on and say, hey, listen, we're going to write this exam and we have to go into the exam hall and we need to pass the examination. So that will encourage you, force you to go the extra mile, study in the pace that you are required to study so you can put yourself in the position to pass the examination. Because sometimes some of those pushes are what you need in order for you to go into the exam hall and pass the examination. Remember also that, our registration is still ongoing. If you are going to sit for the exam and you want to join our community, you can join our community to study under my mentorship, get access to join our live lectures. We do assignments, performance evaluation tests. Your scripts are going to be reviewed. You are going to be properly guided. Most importantly, you get access to the live lectures on our portal. You get access to our key summary videos that will help you to understand the various things that you need to understand when it comes to the examination. And then also you get to download the video. So no need to to be caught in the middle of, oh, I don't have internet, my network is bad. No, you can download the videos, access the videos right in our mobile application, play it over and over again so you can put yourself in the position to pass the examination. So you can also register to study under my mentorship as I hold your hand, provide you with the blueprints that you need to ultimately pass the examination. I see some comments coming in. I'm going to be coming to the comments in the comment section. Leave any questions you have for me in the chat box or in the comment section. Thanks for joining us on the stream. Share the video also with your friends in your WhatsApp groups, in your Facebook groups. Share the video. Let's reach as many students as possible. I'm focusing today's discussion on financial reporting and corporate reporting, looking at some key accounting standards, practical questions, and how we can address some few things as we get into the discussion. So let me bring up my presentation screen and let's get into the discussion. So this is the Chief Examiner's report for financial reporting. But as I said, it is also going to be affecting corporate reporting students because of the question that we are going to be solving today. And so this is the Chief Examiner's report for March 2025 financial reporting. And as always, there is going to be some issues that a chief examiner will draw students' attention on, and that is exactly what we want to look at today and then get ourselves into the question. The weaknesses of the students, the chief examiner says it is question 3, which is technically about the accounting standards. Give me a moment. It's like my iPad is not properly connected. Let's see if I can get me properly connected. Okay, I think we are better now. Yeah. So question 3 has been an issue, which is the accounting standards. Because remember, financial reporting and corporate reporting rises and falls on the accounting standards. And so your ability to understand the principles and most importantly, apply the principles to the notes and answer the question is crucial, and that is what determines whether you pass the examination or you fail the exam. And so that question 3 area is the single entity financial statement. So we are going to go there and use that as a guinea pig on our first session on the live mentorship session today. And we are going to be trying to work out all of the notes, explaining the principles underlining each of the notes, the accounting standards that are at play here, and how we deal with the issue. So this is March 2025. Financial reporting. You can download the question. It's available on the ICA website. You don't need to buy ICA past questions. They are just available on the website. It's a free document that you can get access to. So you can get access to this document. So let's look at this particular question, and we're going to be walking through it one after the other. And I need you to stay with me carefully because it's very simple, and you're going to see it. You're going to love it. The requirement we have here is for us to prepare and present the statement of comprehensive income, the statement of changes in equity, and the statement of financial position for 30th June 2024. That is very important because year ended is important for us when it comes to financial reporting and corporate reporting in the form for presentation to shareholders and in accordance with requirements of international financial reporting standards. Now, before I come to walk through the notes with you, let me share with you quickly some of the things that a chief examiner raised concern on in respect of the students' approach to this particular question. So this is the chief examiner's response. So I want to look at the things that the chief examiner raised concern on, then we come to the questions, and then we solve the question together. So look at the chief examiner's comment on this particular question. He says, the question was straightforward. Unfortunately, only a few students were able to score more than 10 marks out of 20. It means some people walked out with Zokbo, all right, at the end of the day. But only a few students were able to score more than 10 marks. So majority of the students were below 10. Why? So these were the key challenges that the chief examiner identified. 1, lack of proper workings. Now, if you have followed my work, I say this all the time, that professional presentation is key when you are answering the questions. So proper workings. Many candidates did not show clear and structured calculations, leading to incorrect final figures. Like everything is presented haphazardly, like there is no flow, there is no connection. That's the first challenge. Because in order for you to pass the examination, it is important you know how to work well. 2, poor knowledge of IFRS principles. The accounting standards. You cannot be a financial reporting student or corporate reporting student and not be solid in the accounting standards. You need to be solid in the accounting standards. That is very important. You need to be solid in the accounting standards. So some candidates fail to apply relevant standards correctly, particularly regarding sale or return transaction, IFRS 5, and tax accounting. These were the concerns of the chief examiner. 3, errors in classification and presentation. Errors in classification and presentation. What does that mean? It means that probably something that is supposed to be recorded in cost of sales, it is being recorded in something somewhere else. Something that is supposed to be in the OCI, some people brought it in the P&L accounts. These all contribute to students' failure to pass the corporate reporting examination. And then 3rd, errors. Okay, that's the 3rd one. That is errors in classification. Mistakes in the statement format and misplacement of items resulted in lost marks. Because if there is a revaluation surplus for the first time and it's supposed to come to OCI and you take it to P&L, you are wrong. If there is deferred tax on revaluation and you are supposed to take it to OCI and you take it to P&L, you are wrong. So it is important you take note of these. Lack of proper workings, make sure you work well. And so for those of you studying under my mentorship, you join our community, you know professional presentation is something I don't joke with. Having a structured form of presentation is crucial. Then you need to build a strong knowledge in the accounting standards. We cannot walk into that exam hall on the 7th of July, I think so, if my date is right with me, on the 7th of July, and not be strong in the accounting standards. Then don't go and write the exam. And then 3rd thing, be mindful of the classification. The reason I brought you here is because we are going to go into the questions in the moment, and we're going to solve the questions together. And as we solve the questions, we are going to be working on these. The way you do the workings, the way you apply the accounting standards, and the way the classification and presentation has to be done. Because these are the things students are doing that is causing them to lose marks and ultimately fail the exam. So if we can do the right thing, boom, we're going to be good. So guidance for the future. What does the examiner say? 1, understand the IFRSs thoroughly. Oh, Nhyira, when I study the IFRS now, then I forget. I don't know what is wrong with me. Nothing is wrong with you. You just have to study it thoroughly. That is why, for instance, if you're studying under my mentorship, our mobile application, our online portal is the best in the game that you can get. Because you get access to key summary videos explaining principles on all the accounting standards, downloadable, accessible offline, to help you to understand the IFRS principles thoroughly. Because that's what you need. You must have the standards at your fingertips so that when you read the note, boom, you know what you're supposed to do. 2, show detailed workings. That is very important. You need to show detailed workings. We'll come back to that. 3, follow correct financial statement formats. People don't even know pro forma of the financial statement. 4, application of correct accounting treatment. And then 5, manage time efficiently. Time or effectively. Time is always a problem sometime in the exam hall because students fail to work within the time. I say this to my students all the time that if you are given maybe 5 hours to work, probably you could answer all the questions. But all we have is 3 hours. And nobody cares about, I'm a slow reader. I'm a slow writer. I'm a slow puncher. Nobody cares about your slowness. You have to reorient your brain and structure yourself, put yourself in the position where you can move with speed and accuracy. And that means you have studied. That means you understand the principles. That means you've worked with speed and accuracy through assignments, performance evaluation tests. That means you are in the position to not make mistakes. So you read a question, you know what you're supposed to do, boom, you go away. And then the last one is you practice past examination, because regular workings is important. So exposing yourself to questions is going to be very important. So these are some of the guidance that the chief examiner gave for this particular question. So let's go back up together and work together. And I need you to stay with me carefully here as you see how simple these things are. Okay, not difficult. So let's come back. We are preparing the statement of profit or loss, statement of changes in equity, statement of financial position for June 2024 in accordance with what? The IFRS. So let's go to the preambles here. The following trial balance relates to Halidu Limited, Halidu, at June 2024. Okay. So, going to start with my thing, Halidu Limited. Okay? So, we're going to start with our workings. As always, don't be in a hurry to go and prepare or extract financial statements and try to do any shortcuts, please. We're going to go through it step by step, and I need you to stay with me here carefully. Now, forget about what is going on in the trial balance for now. We will go to the notes, because when we go to the notes, whatever we read, it will bring us back into the trial balance. So for now, we don't care about what is going on in the trial balance. So let's come to the notes. So note 1. Halidu made a credit sales of 196 million on a sale or return basis, and this is currently included in revenue in the trial balance. Stay with me. So the entity made sales. So of the total sales of the entity, which is this figure, 3,120,000, 196 million of that relates to sale or was done on sale or return basis. Let's continue to read. At 30th June 2024, customers who had not paid for the goods had the right to return 62.4 million of them. Halidu applied a markup on cost of 30% on all these sales. In the past, Halidu's customers have sometimes returned goods under this type of agreement. So this is IFRS 15 revenue from contract with customers. What do? Stay with me here. Our focus here is not on the 196. The 196 hasn't done anything. Our focus here will be on the 62,400. The 62,400. Because that is what we're going to be interested in. Stay with me carefully. Why? Because that is what customers have the right to return at the end of the year if they have not sold it. So what does that mean? Step number 1. It means we cannot recognize that revenue because the customers have the right to bring that. So that 6.4, which is included in the revenue, cannot be included in the revenue. So what is the double entry? The double entry for note 1 is for us to go debit revenue, meaning you're going to subtract from revenue 62,400, okay? And then you credit trade receivables because it was done on credit. You credit trade receivables. 62,400. Now, in solving this question in the exam, or you don't do the double entry, right? I'm in class. So I'm going to be giving you some additional notes. That is the impulse of this session. Giving you additional notes on what is happening, then we provide the answer to the question. So this is the total sales, the sales due to be returned. Okay, the sales likely to be returned. So we reverse the transaction. They have included it in revenue. We take it from there. It is included in receivables because it was on credit. So we take it also from receivables. Then the inventory, the cost of that inventory, which is with those customers, has to be included in the closing stock because it's not yet with us. So the closing stock at the reporting date that you can see in the trial balance here, this closing stock figure here does not include those goods that will be returned by the customers who hadn't paid us at the end of the year. So the cost of that inventory must be included in closing stock. So what do? Journal entry again. We're going to debit inventory, meaning you add it to inventory. The cost, we'll come to the cost in a moment, and then we're going to credit cost of sales. Meaning because you've not sold it, the cost of that inventory will be subtracted from cost of sales. So cost of inventory held by the customers. If there is a treatment you don't get, please put it in the comment section for me so I can check it for you real time, right? So the cost of the inventory held by the customers must be included in the closing stock. So what is the cost of the inventory? Simple. We are told the company sells with a markup of 30% on all these sales. The 62,400 is the sales figure. And we have markup. So it means that I could say, oh, the profit on the sales will be 30 over 130 times the 62,400. So what do I have? And that is like 14,400. So that my cost, the cost of the inventory, will be the 62,400 minus 14,400. 62, is it 62,400? Yep. 62,400 minus 14,400. And that's 48,000. So that is the cost of the inventory. Alternatively, you could have just gone this way, that cost of inventory should be 100 over 130 times 62,400. So you don't have to break down the profit. 100, 130, 62,400, and that is 48,000. Are you getting the treatment? So you decide which approach you want to go. All right. The KG2 presentation is this one. This one is KG2 presentation. It is how you want to get your understanding. Boom, boom, boom. Then you go. For our professional people, you can go with a second alternative. But that is the cost of the inventory. So the 48,000 will be added to inventory. So you're going to debit inventory with 48,000. Then you credit cost of sales. Cost of sales is an expenses. So when we are crediting it, it means you subtract it. This is the treatment for the footnote 1. Very simple. So sales made on sale or return basis, this is the principle. The goods remaining in the hands of the customer, the sales revenue, is going to be reversed. So we debit revenue, meaning subtract it, credit trade receivables, take it out. Then the cost of the inventory, although it is still with the customers, it has not been included in the closing stock for the reporting date. So what do? We now include it by debiting inventory and then crediting cost of sales. That is the journal entry for this transaction. So this is journal entry. So these are the principles you must understand as an accounting student, right? As a financial reporting student, as a corporate reporting student, this is the double entry that you must have. Once you have this, then we contextualize to the question, all right, by bringing revenue like this. So as per the question, or maybe as per trial balance. So what is the revenue amount in the trial balance? 3,120,000. Then we will less the sale or return. From my note workflow, 62,400. We will not subtract to get a final answer because we don't know, maybe there will be something else later on. So we're going to leave that for now. Workings 2, we will take that from receivables as well. So maybe let me work for trade receivables. So we bring in as per trial balance. So how much do we have for the trade receivables as per the trial balance? Trade receivables, 259,200. $259. Is it 200 or 200? Okay. All right. That's the idea there. Then we less, again, the sales made on returns. Okay, this is it. So in the exam or in solving this question, you are not doing journal entries. That is the principle. This is what you are doing. So you know it has to be subtracted from revenue because we are debiting revenue. You know we need to subtract it from the trade receivable because you are crediting trade receivables in that regard. I say this all the time that it is not about, okay, now I understand. Anytime I see sales or return, I'll subtract it from revenue, I'll subtract it from receivables. That is a robotic way of learning. And if you learn like a robot like that, you're going to crash. So that's why I always say that it is important you understand the principle behind what is happening, which is what I explain here about the journal entries. The journal entries, the principles, the rationale behind what is happening, so that when you see it somewhere, you don't have to remember, oh, what? No, you apply the principle practically. All right. Workings 3, going to do like cost of sales there. So we see as per trial balance for cost of sales as well. So what is the cost of sales as per the trial balance? That's the second item here. 1,757,400. Like that. Then remember what we said on the cost of the inventory. We are crediting cost of sales. So you subtract it. So cost of goods on sale or return, 48,000. Take it out. Then maybe the last workflow that I can do will be the inventory situation. Inventory. Now, that doesn't mean necessarily you would have to open all of these T accounts, because some of them are just one items, and so you can work for them on the face of the financial statement. Sorry, but I say this all the time that you don't you are not going to be extracting the financial statement as you are working. You want to finish all your workings and extract the financial statement, because the financial statement is necessarily not an issue. It's the workflow that is going to be an issue. All right? So there are some of the workflows we could present them on the face of the financial statement. The others, we could work them like we are doing. So as per, trial balance. And usually you don't also know how many notes that may affect a certain item. So it will just be prudent for you to be doing the workings as we go. 112,800. And we are adding back the cost of the inventory made on sale or return. So let me just copy this from here. There we go. So that is the treatment for the footnote 1. Look at just one note we have read. Look at the plenty notes that we have to do. No, you see, when you do that, you are crashing your brain. There is no point in trying to do that, because you're going to be crashing your brain. Understand what we are doing. Because when you understand the principle, that is the only way you can move with speed and accuracy. But if you don't understand the principle, you cannot move with speed and accuracy. That's the most important thing. That's the most important thing. All right. So that is footnote 1 and what we are supposed to do there. We are done. Let's go to footnote 2. On July 2023, I need you to stay with me carefully. Remember, our year ended in the context of this question is June 2024. So if our year ended is June 2024, then it started on 1st July 2023. And so 1st July 2023 will end on 30th June 2024. So 1st July 2023, as we are seeing here, is at the beginning of the year. It's at the beginning of the year. Let's continue. Halidu revalue its property to 144 million, of which 360 relates to land. All right. So the revaluation is being done at the beginning of the year. Now, if you remember, when we revalue assets and there is a revaluation surplus goes to OCI for the first time, right? If it is a loss, it will go to P&L. All right? Now, there is going to be depreciation for the year. Because revaluation was done at the beginning of the year, it means depreciation for that year will be charged on the revalued amount. All right? And if there is going to be any transfer because of the upward revaluation from the revaluation surplus to the retained earnings, then we would have to also do that over the remaining economic useful life of the asset at the date of the revaluation. Don't worry, we're going to get into this in a moment. Just stay with me. This property was acquired 10 years ago. Please stay with me. At a cost of 1,200 million, which included 300 for land. So I want to quickly get excited. Note 5 or workings 5. Going to have land here. Going to have the building there. Going to have my total here. Again, want to present cleanly for the examiner. So slash into my currency sign. So let's bring in the cost of the asset bought 10 years ago. So the initial cost of the asset, total is 1,002. They said land was 300. It means the building was 900. Please stay with me. Stay with me. So this was the cost of the asset 10 years ago. 10 years ago. Okay. We're going to less any accumulated depreciation. You know, land is not a depreciable asset. So we go to the trial balance. Let's go see property. You can see cost of 1,002. You can see depreciation at 1st July, 225,000. Hey, give me a moment. I think it's a million. So I need to do 300,000, 900,000, 112,000 here. You got to be careful about the zeros, right? Because in the notes, the figures are in million, but in the trial balance, we are working 3 zeros up. So you got to be careful about picking the figures there. Accumulated depreciation is 225,000. So 225,000. Why are we doing this? Because we need to know the carrying amount of the land and building at 1st July 2023, where the revaluation was done, so that we can determine revaluation surplus or revaluation loss. Principles. So we get a carrying amount at 1st July 23. Land is not depreciated, so it's still 300,000. But our building now, what will be the carrying amount? We are subtracting. Let me put it in brackets again, because although I have less there, by the time you realize somebody is adding. So 900,000 minus 225, 123, 675,000. And so when we do the arithmetics, 12,000 minus 225,000, and that is 213. No, give me a moment. It's like I'm screwing up something. This figure. So this should be 1,200,000. It's like I'm messing up with the zeros, right? So 1,200,000 minus 225,000, 975,000. So at 1st July 2023, where the revaluation was done, this is the carrying amount. So on that date, what happened? They revalued the property to a total of 1440. And they said land was 360,000. So we go to revalued amount. On that same date, 1440, 123. Land is 360,000. So the balancing figure will be the building component. So 1440 minus 360 is 1080. So certainly the asset has gone up in value. So the balancing figure is going to be revaluation surplus. Right? Revaluation surplus. Now, where does revaluation surplus go? OCI. Okay, other comprehensive income. We'll come back to that. So 60,000 for the land, 1,080,675, 405,000 for the building, giving us a total of 465,000. Okay, so that is getting the revaluation surplus. So when we go to other comprehensive income, this revaluation surplus is going to go there. So if you pay attention, you realize that I have not even finished reading the second footnote. But once I read up to getting details about the revaluation issue, I must calculate the revaluation surplus. That is how you apply principle. So, okay, the asset was revalued at the beginning of the year. My first question is, all right, what is the carrying amount at the date of revaluation? So that is why we have to bring the cost. We have to less the accumulated depreciation so that we get the carrying amount at the date of the revaluation. Because that carrying amount must be compared with the revalued amount at that date, then we can get the revaluation surplus or loss and account for it. So now that I have this, let me continue to read to see what is happening now. The building had an estimated life of 40 years when it was acquired. Stay with me. Stay with me. The building had an estimated life of 40 years when it was acquired. Remember, the asset was acquired 10 years ago. So at 1st July 2023, what will be the remaining useful life? 30 years. Did you get that? So at the date of acquisition, the useful life of the asset was 40, and this has not changed as a result of the revaluation. And they said this property was acquired 10 years ago. So at 3rd July 2023, the remaining useful life of the asset is 30 years. Why is that important? Because when an asset is revalued and the economic useful life remains the same, depreciation will be charged from the date of the revaluation using the remaining economic useful life. Let's take that again. When an asset is revalued and the economic useful life of the asset remains the same, from the date of the revaluation, depreciation is charged using the remaining economic useful life. So the asset was bought 10 years ago. The total useful life of the asset is 40 years. So it means at 1st July 2023, we have 30 more years to go. So we calculate the depreciation for the period So we less depreciation. And again, it is the building that we'll be looking at. So 1080,000 divided by 30 years. All right? And that is 36,000 cedis. So we can get a carrying amount of the London building at the reporting date. July 2024, still 360 for the building, for the land, 1,116,000, and then 36,000 from here, so that in total we'll have 1,476,000. This is purely IAS 16. Depreciation is charged on straight line basis. You don't need miracle on that, because once we have useful life in there, we don't need a miracle. The revaluation has not yet been recorded in the books. The revaluation has not yet been recorded in the books. So what does that mean? It means that if you take, now in the statement of financial position, this will be the figure for land and building. Or if you want property, and that will go under non-current asset. Okay? That will go under non-current asset. Then the last sentence is, Halidu has a policy of transferring any excess depreciation to retain earnings. Oh. Remember, when an asset is revalued upward and there is a revaluation surplus, more depreciation is charged than we should have charged. For that reason, the profit is reduced by the excess depreciation that the entity charges as a result of the upward revaluation of the asset. And so sometimes, in order to compensate shareholders, we reverse that treatment by moving the amount from the revaluation surplus to retained earnings. And in this question, they said Halidu has a policy of transferring any excess depreciation to retain earnings. But you got to be careful. It is not on the entire revaluation surplus. It is on the building component, because it is the building we depreciated, not land and building. And so we're going to work this out here. Transfer to retain earnings. It's going to be the revaluation surplus divided by the remaining useful life. Again, we are in class, so I need to teach you, right? The remaining useful life. Now, the revaluation surplus you are bringing is not the total revaluation surplus. It's the revaluation surplus that relates to the depreciable component, which is the building. So you need to be careful. Principle. Hence, the transfer that we would have to make will be 405,000 divided by 30 years. And that is 13,500. This will be adjusted for in the retained earnings by subtracting it from the revaluation surplus and then adding it to the retained earnings. Because the journal entry for this is for you to debit revaluation surplus. You debit revaluation surplus with the 13,500, and then you credit the retained earnings. When we say you debit revaluation surplus, it means you add it. You subtract it from the revaluation surplus. When we say credit retained earnings, it means you add it to the retained earnings, because retained earnings has a credit balance or keeps a credit balance. That is the idea in respect of that. So what does that mean? It means that at this point that we are now, and we will prepare the statement of changes in equity because, as I said, this will be done in the statement of changes in equity generally. And when we get there, you're going to see how the treatment generally is supposed to be. But I can bring it up if I want to. That's the second part of the discussion, though. So, statement of changes in equity for the year ended 30th June 2023. So we will have share capital. We'll have retained earnings. What else we got? You want to see the trial balance quickly. Retained earnings, share capital, revaluation surplus. Okay. So revaluation surplus. What else we got? Under equity, do we have other components of equity, share premium? There is nothing like that. Okay, so I can bring in the balance brought forward, which is going to be the opening balance. So this is part of the solution, right? Because I want to show you that. So share capital, 420,000. Retain earnings, the opening figure below here, 68,700. Kind of slashing my currency sign as always. If that is the only thing, we're going to have total in the last final column. Then revaluation surplus, it happens that we have an opening figure of 78,000. So this is our statement of changes in equity, right? Then you're going to bring the revaluation we did during the year. Which was from the PPE workflow. We got a revaluation surplus in total of 465. So that's going to go there. 465,000. All right. Then we will bring in the transfer to retain earnings in the note which was given the last statement there that Halidu has a policy of transferring any excess depreciation to retain earnings. So we bring it in. So transfer to retain earnings. So as I mentioned here in the double entry, you are debiting revaluation surplus. It means you subtract that figure. So 13,500 is subtracted. Then you credit retained earnings, which means you add the same thing to the retained earnings. That's the meaning of what we are talking about. Because we are compensating the shareholders for the additional depreciation that has been charged because of the revaluation. Had it not been for the revaluation, look at it. If we hadn't revalued the asset, the building would have been still depreciated on the 900,000. So, because that is the cost of the building, right? So 900,000 divided by useful life of 40 years will be 2250, 500. Okay, so depreciation on cost of asset or cost of building will be the 900,000 divided by 40 years, and that is 22,500. But now we are going to be charging depreciation on the revalued amount, which is what we did there, 36,000. Did you see it? 36,000. So the difference is the 13,500, which is the excess depreciation we are charging because we are revaluing the asset. I can't even spell excess. Can you imagine that? So excess depreciation. So we should have, if not for the revaluation, our depreciation would have been 22.5. But because we revalue the assets at the beginning of the year, be careful. Oh. If the revaluation was done at the end of the year, we wouldn't be bothered about making the transfer. But the revaluation was done at the beginning of the year. That is why we have to make the transfer. So, had it not been for the revaluation, our depreciation for the year would have been 22,500. But because of the revaluation, our depreciation for the year is 36. So that excess 13.5 is an additional expenses that will be charged to the P&L account. We've not been told where depreciation is supposed to be, but probably to be in admin. But as we read the note, some additional information may come up and we would have to deal with it later. So additional expenses of 13.5 has been charged. That is why we are compensating the shareholders by reversing it and taking it from the revaluation surplus and bringing it to the retained earnings, so that we sort of present the profit back to the original as though the revaluation surplus never occurred. Do you get the idea? Because dividend will be paid from the retained earnings, and that is the rationale for the transfer. But it is not every company that does this. In the context of the question we have here, the entity's policy allows it, so we go with the entity's policy. That is treatment of footnote 2, and that is IAS 16, property, plant, and equipment. So I need you to really understand what is going on. Now, again, look at the workflow you have to do. And we are just at footnote 2. So speed and accuracy, application of the principle. It is not now you are going to read a question and trying to figure out, hey, what am I supposed to do? Hey, by that time you're already failing. So you must build your base. Be strong in the standards in such a manner that when you read the question, you know exactly what you are supposed to do. Then the double entries should be playing in your head, because technically you are applying the double entries. That is the idea about this. That's the idea. Any questions about these two notes? Any questions, put them in the chat for me or the comments session for me, and I'm going to be providing you with answers in that particular case for you to understand there. Okay, so I'm seeing some chats coming up. Let's see if I can. Let's see if I can look at some of those chats quickly. Then we can proceed. Bye, Kamara said, thank you very much, sir. It's a pleasure, Kamara. I feel blessed in joining your live sessions. We give thanks to God. Mafu Ajay said, hi. Hello, Ajay. What else do we have? Daniel said, Nhyira, good evening. It's been a while. I'm around. I'm in Ghana. He said, I'm struggling with PSA. What is the problem with PSA? Public sector accounting and finance shouldn't be a problem if you understand the structure of the syllabus, the context of the question, you are strong in your IPSAS, because public sector accounting and finance is just now like financial reporting, right? So there will be a questions dedicated on the IPSAS, you must know. There will be final accounts preparation question, either on the central government or a covered entity. So you must be strong in terms of the IPSAS as well as revenue management and expenditure control. Not only that, it is important that you are strong in the evaluation of financial statement, either using common size analysis ratio analysis, or preparation of the statement of budget performance, which is a budget variance analysis, because one of those three things will be in the exam hall for the public sector 20 marks area for evaluation of financial statement. So standards, the IFSAS, International Public Sector Accounting Standards, 20 marks. Financial statement preparation, 20 marks. Evaluation of financial statement, 20 marks. Making 60. Then we go to the A aspect of the syllabus, which is PIFA, 10 marks, and then public sector budgeting, 10 marks. So that is 80. Right? So because there will be done deal 10 marks question in the exam or coming in for PIFA in that regard. And so you must understand all the theory areas about PIFA. Then you must understand the calculation areas on PIFA, how to use the weakest link method, the average method, and how to prepare the statement of budget performance in the PIFA environment and analyze the performance of the entity. So 10 marks. Then budgeting, quite a voluminous area though, but you must know everything under public sector budgeting because there is a 10 marks question waiting for you in the exam hall on that, making 80 now. Then we come to the issue in respect of governance in the public sector. What is governance in the public sector? Technically, you are looking at the role of the key public officers as well as the principle that of ethics that public sector officers must abide by in carrying out the 7 principles, the Nolan 7 principle for public sector officers. You know that. That's 10 marks going to come in the exam hall. Then the last 10 marks will be in the regulatory framework discussions in that case. So these are the thematic areas. So your issue then will be, or the concern here will now be, okay, how do you study all of these things and understand them in a manner that will put you in the position to pass the exam? So you must understand the principles. Underlining each of these things, you must solve questions, work with speed and accuracy. Because sometimes people feel the public sector that they've been learning all this while is the same public sector now. Debbie, the game is different now. It has been spiced up a little bit. So you need to be careful of the way you study. But these are the thematic areas. And if I'm a student and I know these are the thematic areas, what do? I attend lectures, get access to quality lecture videos, study under the mentorship of Nhyira Premium, get access to quality mentorship, be guided properly. Most importantly is to make time to study. Because we can let Albert Einstein or, a philosopher in the past to teach you, and you will still go and get Zockball in the exam hall. So you must sit down yourself to do something on your own, irrespective of who the heck is teaching you. Because most of the times, that is the problem. It's not that you don't have access to quality tuition, it's that you don't make time to study. And that is where the excuses will come. My job, my this, my that. But as I say always, nobody cares. Unfortunately, but nobody cares. So you must make the time to study. So that's what I would say to you, Daniel, if you're struggling with the public sector. The thematic areas, know them. Get access to quality lecture videos. Attend lectures. And sit down to study. Don't sit down a week to the exam, 3 days to the exam, and go and attend some magic class anywhere. The thing that is in the syllabus that even in 12 sessions, we are not able to exhaustively finish the syllabus. We do like 92, 95% of the syllabus. You think a 6-hour class can magically help you to pass the exam? No. You should be smoking something. Right? And so, and this goes for every subject, not necessarily public sector. Every subject. So you have to commit yourself consistently to study. If not, you're going to make a mistake at the end of the day. And that is very important. So that's what I would say and that goes to everyone else struggling. Know the thematic areas. And if you're studying under my mentorship, you're not going to have any problem with that because you're going to know all of these things. You're going to be guided properly. But most importantly, you have to sit down and study yourself. Work with speed and accuracy. Expose yourself to questions because that is how you put yourself in the position to go into the exam hall, write the exam with confidence, and most importantly, pass the examination. So to anyone struggling, that is the strategy. We can let Confucius teach you. Let him resurrect and teach you. You will still go and get Zokbo because you have to sit down to do something by yourself, for yourself. And that is how you excel. All right? Another comment coming up here. Any other questions, please put it in the chat for me. I'm looking at some of the comments coming in the chat in that particular case. What do I have here? Thanks so much, Nhyira. I will always be available to learn under your mentorship, sir. Okay, who the heck? Okay, Genesis. All right. It's always a pleasure trying to help you guys and providing you with the guidelines that you need. So that is note 1 and note 2, the accounting standards in that case. So the next thing is going to be note 3. But I'm going to be wrapping up around here today. And God willing, tomorrow we're going to be continuing with the discussion from note 3 to see how these accounting standards apply. But on the overall, what you are seeing is you need a solid understanding of the accounting standards. Okay? You need a solid understanding of the accounting standards. That's very important. We cannot overemphasize that. Once you understand the accounting standards, we take you to the next stage, and that is to expose yourself to questions. Work with speed and accuracy. How do you understand the accounting standards? By making sure that you have access to quality videos. And that is what I keep on telling you. Enrolling in our program, getting access to the summary videos on all the accounting standards. In the mobile application, you can download them and watch them over and over again. You don't need internet. So you can watch these over and over again to help you to assimilate the standards. Then once you do that, expose yourself to questions like we are doing now. So you read a question, you apply the principle. You read a question, you apply the principle. As you are doing that, you are moving with speed and accuracy. You are learning how to familiarize yourself with the calculator flow, the punching speed, because all of these are going to be making or breaking you ultimately in the exam hall. And that is what you must understand in that particular case. Okay, one more question. Fusaini Abdul said, Nhyira, good evening. What is the easiest way to understand the IASs? Oh, goodness. I wish I have a direct answer for you. Okay? The reality is there is no easy way. The truth is, the way you understand the accounting standards is by making sure that you are taught by someone who knows the accounting standards and understand how it has to be presented in the simplest manner. So it is not just about how do you study, it's about who is teaching it to you. So some people know, but they are not called to teach. Some people understand, but they don't have the personality, the confidence, the mind to be able to teach it. So let's start from your teacher. So you must get lectures from someone or people who understand the standards and can present the standards in a very simple and easy way. Like I'm doing. Like if you enroll in our full program to study under my mentorship, getting access to our summary videos. I take time, we take time. On our live lectures, we take time, walk through the principles. That's the first part. Who the heck is teaching you? Then the second part is, what questions are you going to be solving? You're going to sit down and be solving questions, working with speed and accuracy. So once you understand the principle, now you're going to expose yourself to questions. That's very important. And that is where, for instance, our program here, assignments, performance evaluation tests are done because we want to find out what we studied, what you claim you understand. This is a question. Can you solve it? Can you work it out? So number one, who the heck is teaching you? Number two, do you understand what is being taught? Number three, how many questions are you exposing yourself with on your own? Number four, you need to practice questions under time, assignments, performance evaluation test. So what is the easiest way to study the accounting standards? Learn from the best, expose yourself to questions, sit down, and practice questions on your own. There is no shortcut to heaven. There is certainly no shortcut to the accounting standards. There is nothing like easy way. You have to be committed. You have to be committed. You have to be committed. And that will require attending lectures, so you are studying under the mentorship of an expert or a knowledgeable person who knows how to teach what is being discussed. Number two, you got to sit down, study on your own, expose yourself to questions, work with speed and accuracy. So if you ask me, that is the magic to understand the accounting standards. That's it. There is no easy way. There is no easy way. And don't let anybody lie to you that, hey, no. To breathe the standard, you must understand the standard. And that means you must have a good person to teach you the standard. That's the beginning, right? So that's what I would say. Husseini Rahim Sterling. Thomas said, thank you very much. It's a pleasure, Thomas. Thanks for joining us on the stream today. I am ending because we have our live lectures coming up in the next 15 minutes, public sector accounting and finance. So got to get myself ready for that as well. But I'll be coming your way tomorrow as we continue with the Accounting Standard Masterclass, looking at the live mentorship session where we are solving questions and moving through the various things we must understand on how the principles apply in a given question. Thanks for watching. For the likes, the sharing, the thumbs ups, and the comments. Thank you very much. And I'll see you same time tomorrow, 4:30 GMT, as we continue with the discussion. Stay safe. Bye-bye.